Now students, let us prepare a machinery account for this particular question. This question says that machinery has been purchased for rupees 11 lakh. This is the cost of the machinery on 1st January 2006. Now students, the date of purchase here is mentioned as 1st January 2006. The scrap value at the end of 5 years is expected to be rupees 1 lakh. So here 5 years is the useful life of the asset and 1 lakh is the scrap value. Now in this case, let us assume that accounts are closed on 31st December each year. Now students, since the accounts are closed on 31st December each year, that means the financial year of this particular company runs from 1st January to 31st December. Now in this case, nothing is mentioned, so we'll assume it to be a straight line method, and the depreciation would be calculated as depreciation is equal to cost, that is 11 lakh here, minus scrap value 1 lakh divided by useful life of 5 years, which comes to rupees 2 lakh each year. So now students, on 1st January 2006, it would be to bank account and the amount would be rupees 11 lakhs. The year is ending on 31st December, so 31/12/2006, it would be by depreciation. The amount would be rupees 2 lakhs as calculated here. So the balance would be 11 lakh minus 2 lakh, that would be 9 lakhs. The total would be same, and do mention here as by balance carried down. This closing balance of 2006 would be brought down on 1st January 2007 as opening balance. To balance brought down 9 lakhs. At the end of this year, that is 31/12/2007, again depreciation of rupees 2 lakh would be charged. So by depreciation account, rupees 2 lakh, since it is straight line method and we had calculated this amount to be rupees 2 lakh. At the end of this year, calculate the balance as we do in all other accounts. 9 lakh minus 2 lakh would be 7 lakh and the total would be rupees 9 lakh. Do mention it here as balance carried down. This balance would be brought down here as to balance brought down, which would be the opening balance for year 2008. So now students, in this case we calculated depreciation using the formula cost minus scrap value divided by useful life, which comes to rupees 2 lakh, and this 2 lakh has been charged for each year, assuming it to be a straight line method.